We are here with Henry Owsley of the Gordian Group. He's CEO, and that's a New York-based firm that does financial advisory work. So Henry, welcome and thanks for joining us today.
Thank you. Good morning, Laura.
Good morning. So part of the reason that we are inviting you in is to talk about your book that you've recently done. I think it's the third book that you've written in financial advisory work.
Well, it's the second actual book, but
Okay.
we've done a chapter in someone else's compendium.
So it counts as three then, I
guess
would
so.
say. Well, so the one thing I wanted to ask you about first starting there is, you know, the idea of the book is a little bit of an antithesis of what a lot of credit investors anyway think about the whole market that they're investing in, that private equity should be able to hold on to a lot of the value. Can you talk about this? Is this an underrepresented area of focus for financial advisors?
Well, it has been, and part of the reason has been private equity firms have been heretofore reluctant to antagonize some of their lenders. But in this cycle where in order to do follow-on financings, you need to demonstrate superior rates of return in your portfolio, the incremental rates of return you can get from focusing on your troubled investments may be the difference between raising your next fund and not.
So essentially, if you're not aggressive, you may not get the IRR that you need, and you can't raise money in the future.
That's certainly very possible, and is one of the reasons why we have had a great deal of traction with our private equity effort in the last couple of years.
Excellent. And now, are there certain companies looking forward for the next year, or the next 2 years perhaps, that you feel like would really benefit from this type of advice?
Well, any company with a significant private equity ownership or entrepreneurial ownership is going to benefit from more thoughtful representation of the equity constituency. So many advisors, both legal and financial, determine where the value falls off in the capital structure, and anybody below that, pursuant to the strict priority approach, is out of luck. We respectfully disagree and believe that equity has value not just from the snapshot in time where you take the picture today, but it also has option value. Things can get better down the road, and quite frankly, it has control value, since it, at the moment, controls the board and the process.
Right. So a lot of points in its favor then, really.
Absolutely.
And I'm sure that you must have had some pushback from some people, at least, on this idea in the past, or maybe in the recent past. What do you say when people think creditors should get paid?
Well, first of all, pushback is a very tame word for saying what people have said to our approach, but we've been very successful at representing old equity constituencies aggressively. And I was very heartened to see in the most recent recommendations from the ABI about the new bankruptcy code that, at least for small and medium-sized businesses, that there is a step away from the absolute priority rule to allow old equity constituencies to earn their way back into the situation. I view that as monumental intellectually in the right direction.
And that sort of, you know, underscores what the points you've been talking about in your book.
Absolutely.
And one thing I wanted to ask you too, in reading the book, now you do talk about a lot of the options that the companies and their equity owners do have. But like you say, it needs to happen early on to have the best optionality. Does that get expensive to really hire an advisor early on, or what are things companies can think about in that vein?
Well, obviously hiring people is a cost, but from a cost-benefit standpoint, addressing problems earlier can save you huge value down the road. And, you know, it's a cost-benefit equation, and it's not dissimilar from addressing a very serious disease earlier in the process than not.
So sort of put up some money now for retainers and such, and you can really benefit down the line.
Yes, and it doesn't necessarily cost a lot of cash. We, perhaps other advisors who are old equity oriented, have taken significant ownership stakes in situations and benefited side by side with the old equity constituencies as time goes forward.
And do you encourage companies to come directly to you, or the private equity owners would be more the likely subject?
Well, both the entrepreneurs and the private equity owners should feel free to pick up the phone and give us a call. And we can walk through their alternatives with them and help them understand and recognize what the possibilities are in an uncertain world going forward.
Right. And I guess maybe if we could just end it with where you see some distress coming up this year, beyond energy, because I think a lot of people do harp on that at this time period.
Well, energy is but one of the commodity segments. Many other commodity segments are also disturbed right now. Metals, both precious and otherwise. And another focus of any restructuring is where there's volatility, where there's change, you create winners and losers. And the healthcare sector is an environment where there's enormous structural change going on in this country. And so we are focused heavily on healthcare, be it hospitals or device companies, because we see that change creating a need for restructuring services.
And is that because of the new healthcare law, or are there other factors?
I think that Obamacare merely accelerated a number of the trends that had been going on, so I think it may have compressed or telescoped the time frame, but I don't think Obamacare by itself is the reason why we're seeing the change in healthcare. It has to do more with the enormous amount of cost that needs to be incurred to make a population healthy.
Interesting. So not the arbiter then. Well, it's great that you mentioned that, because I haven't heard anyone talk about healthcare for a little while, so I think maybe you could be ahead of the curve there. So yeah, thanks so much for joining us. We've been speaking with Henry Owsley from the Gordian Group in New York, and he is a financial advisor there, the CEO. Thanks so much, Henry.
Thank you.